Hi there, Serial Trader here. I got a request to look at XLC, which we've looked at before, and also ESI, so let's jump into that. Now XLC, I still have it marked up from the last time I had a look, and I believe if I recall, we were looking for further correction to the downside, working that we maybe had an A wave down, B wave up, and we were anticipating a C wave down. And I believe we were looking at some common objectives as far as A versus C equality, and the first one being the 618 relationship, 786, and the equality. Well, we've gone, in fact, we've actually briefly stabbed below the equality relationship, so I'll just leave that one up there on its own. But so far, largely holding around that equality level, and you can see my little, at the time, guesstimate of what this potential C wave down would look like. Well, in fact, we actually had a faster and deeper C wave than the little projection, but nonetheless, directionally, it was on the right track there. Okay, so let's just adjust some things. So I'm comfortable that we have an ABC down. Let me just clean a lot of this up here. I get rid of this channel. Some of these retracements. That as well. Okay. Yeah, we can even get rid of the sub labels there. Just keep it relatively simple. So ABC down, but as far as the overall trend off the March 2020 lows, I would have to say this is likely a fourth wave in development, and we would probably go like this. We had this initial wave 1. And that would be our 2, because this is our largest pullback here to match up with whatever we're doing here. And then that's likely a wave 3 top. And we're working the 4 with the 5 up still to come. That would be the idea behind that. Now, let me just bump up the wave label degree there and drop this one down actually. I'm not convinced that we're quite bottomed here yet. Now, overall, I would still be bullish on this ETF, as in, like, this isn't likely the major top, and we're going to some big bear market here. I don't think that's what we're looking at all. But what I think is we might need further development in this fourth wave. So we do have a clean ABC down that looks good, a nice 535 ABC down, but I do have an issue. Well, actually, I'll tell you what. This is probably the best way to look at it here. If we just go into the subdivisions of this proposed C wave, so I think we got the 1 and the 2 here. That looks like a nice 3. Now this is a rather large, but still technically non-overlapping fourth wave, ABC up. You can see this clear 3-wave move up, so it does look like we need to come down here and at least spike these lows. Okay, now let's just get this degree down appropriately. One more actually from what we're working with. So this is probably the path I'd be looking at here. Just a little bit more, not substantial, but a little bit more downside. Spike the prior low here, which is around 73.59, and it doesn't have to go a whole lot lower than that either. In fact, usually the last push down is pretty weak, and it just basically does a false break, stops everyone out that's long against that, and then you get the big reversal up that you've been looking for, and potentially progress in this impulse wave up for the fifth wave, right? But not to look ahead to that just yet. Okay. Yeah, this doesn't look bad. If you even go in on like the hourly chart, probably get the 1, 2, 1, 2, 3, 4, 5, 4. Yeah, it would just need a little bit more subdivision to the downside, but it's probably most of the way completed as far as correcting. I'd be looking probably towards the end of January, early February, looking at this for a potential entry, but just doesn't look quite ready yet. But basically thinking that this is just a ABC down, fourth wave, zigzag fourth wave. Now another take on that, well, also one thing I'll do, we'll put up a fib retracement, see if we're at any common fib levels for a retracement of wave 3. So you can see we're right around the 38.2% retrace, which was a very common fourth wave retracement level. But there's also the 50% retracement level kind of lurking not too far away here at around 71 and change, close to 72 actually. So far we've gone kind of in between those two retracement levels. So I wouldn't be surprised if kind of in the next couple weeks here, maybe we get closer to this 50% retracement level and spike those lows. Now another scenario here, it doesn't really change much, but just some details here on the wave count would be something like this, and that's okay, where we got the ABC down, but we also have the ABC up, depending where you want to put the short-term subwaves, but let's just keep it simple, ABC up, and then maybe one more ABC down, and you'll get where I'm going with this soon. For a overall WXY double zigzag, I mean, you're kind of splitting hairs whether you want to label it as that or as the first one I was going with. Again, directionally they're the same. They're both suggesting that this is a nearly completed correction, and that the next the next thing to look for will be another impulse wave up to new highs. But yeah, either way, whichever wave count suits you or you like better, they have a similar implication. So yeah, I would be definitely eyeing this up in the next couple weeks here. Likely towards the end of the month would be my preference for starting to build a longer term position on the XLC ETF. Okay, so there's that. Now if we go over to the ESI, Element Solutions. Okay. Now this looks like a nice impulse wave underway since our March 2020 lows. I would say, well, let's take a stab at it here on the daily chart. Okay. We probably got the one and some sort of wave 2 without trying to go too hard on that. 1, 2, 3, 4, 5 of the 3. Okay, so that's probably our wave 3 there. And let me just get these out here, and then we'll play with this in a moment. So yeah, put our wave 3 ending here. Now what do I notice here? Okay, as we zoom in a little bit here. So this looks like a 3-way move down. This looks like a 3-way move up to a new high. But this looks like a potential 5-wave move down. Okay, but didn't make a new low. So what would that be suggestive of? Well, to me that would be a running flat where you go A down, B up to a new high, and then 5 down for C, but to a higher low. It wasn't strong enough to actually go and spike the lows like you would get in an expanded flat. So that is a little bit of a hint of potential underlying bullishness. And really, you have a decent case that we have a little impulse wave. So say we're already beginning our 5th wave move up here, right? Let's just entertain that. And within that, we would be looking at, now you could either go like this, or let me just adjust this in a moment. Drop this degree down by 1. So you have the 1, 2 here, and what do we get for a fib retracement if that's the proposed 1 and 2? Oh, we went right down into the 618 retracement area and reacted nicely off of there. So I kind of like that. But if we do see still a little bit more near-term market weakness, it's difficult. It's not impossible, but it's quite difficult for individual stocks to rally, broadly speaking, if the market still has a little bit more downside, you know, like the S&P 500 and the NASDAQ and the Dow and that sort of thing. So in that scenario where we have a little bit more near-term weakness, you could actually just get something like this. Now, depending on what time frame you're looking to be on, this may not be of big consequence. But from a shorter-term perspective, this definitely is something to consider. And let me just drop that degree down. You could have one more little push down just to challenge this level from the 11th of January at 23.87. So let's call it around 24. and still be looking to hold this, which was 21.97, so let's call it around 22. Okay, so maybe a little bit more consolidation in this range between, let's call it 22 and close to 25 before we start really getting that launch up there. But this is a good looking chart. I would definitely be looking for a long entry on this for sure. So that's a good pick. I like it. Okay. Let's just go over to the Thinkorswim charts here. Look at some candlesticks. So this is XLC. So you can see we got the 50-day simple moving average crossing below the 200. Now, some would call that a death cross, but I would argue not really, because the actual trajectory of the 200 is still actually slightly up and up to sideways. It's more of a death cross if you're already in a, I would say if you're already in a downtrend and the 200 is pointing down, and if you've had a counter trend rally where the 50 got above the 200 and then crosses back below, to me that's a more valid death cross than this. But to each their own. But yeah, I mean, not much else to mention there. I would just be looking to just spike these lows down here just to stop everyone out. 73.59. Once you do that, I would be satisfied to start feathering into a position for the upside on XLC. Okay, let's go over to the other one. So, ESI. And this looks a lot better from like a moving average perspective, simplified, moving average perspective. So the 200 and the 50 are pointing up. The 50 is above the 200. Basically, all the moving averages are in kind of a bullish alignment here. We actually had a little bit of a bullish engulfing candlestick, if you will, on Friday. You can see the real body of Friday's candle engulf the real body of Thursday's candle. And we had a nice reaction, actually. You can see that little lower shadow spike down there and just reacted off the 50-day simple. So this looks like a pretty bullish chart. Again, could get pulled down a little bit here short term if the overall market does the same thing, although it doesn't have to. This could certainly diverge. There's plenty of stocks all the time that diverge from the indices, but I always like having the indices kind of as a tailwind instead of a headwind if I'm looking to feather into something. But yeah, this is looking good. I would definitely be searching for some upside on this one, wherever you end up picking your entry. Ideally, it does hold above this, which was just this little test of the 200-day simple moving average, and that test on a closing basis certainly held. Okay, well, that's probably good. Hopefully that was helpful for you. And until the next video, Serial Trader signing off.